Here is a detailed summary of the Synopsys, SNPS, Q2 2026 earnings call, designed for clear and concise delivery. Introduction. Good afternoon, everyone, and welcome to the Synopsys second quarter fiscal year 2026 earnings conference call. We're here today with Sassine Ghazi, President and CEO, and Shelagh, Glaser, CFO. Before we dive into the financials, please remember that forward-looking statements made today are subject to risks and uncertainties, and actual results may differ materially. You can find more details in our SEC filings and press release. Q2 2026 performance highlights. Synopsys delivered a strong second quarter, exceeding guidance across revenue, non-GAAP operating margin, and non-GAAP EPS. This success was driven by solid execution and robust, AI-driven demand. CEO's overview. Sassine Ghazi. Sassine Ghazi emphasized that Synopsys is at an exceptional moment as the leading engineering solutions provider. He highlighted that EDA, IP, and multiphysics simulation are now essential components of the AI supply chain. The increasing complexity of chips and systems, driven by AI scaling and architectural diversity, is fueling demand across Synopsys' entire portfolio. The company is uniquely positioned to capitalize on this, offering integrated solutions from silicon to full-scale AI and physical AI. He expressed strong confidence in the company's strategy and trajectory, noting continued strong execution on the Synopsys SNPS integration, a disciplined focus on higher-value IP opportunities, engineering excellence driving innovation in agentic and multiphysics fusion technology. Based on this momentum, Synopsys is raising its full-year 2026 guidance for revenue, operating margin, EPS, and free cash flow. Segment performance. CEO's remarks. Design automation. This segment saw robust performance, driven by AI design activity and sustained demand, particularly in advanced nodes and 3D IC solutions where Synopsys holds leadership. Hardware-assisted verification was a key growth driver, with significant demand from hyperscalers for scaling emulation and prototyping of complex AI designs. EDA leadership. Synopsys is seeing production-scale adoption of its 3D IC solutions, exemplified by a leading HPC provider using its unified multiphysics-aware design-to-sign-off solution for a complex AI accelerator. They also lead at advanced nodes, with over 30 full-flow technical wins, delivering superior PPA. Innovation. The company is pioneering multiphysics fusion technology, showing up to 3x faster design closure and up to 2x faster analog design turnaround times. This technology is in trials and will begin commercial rollout in the second half of fiscal 26. They are also seeing early monetization of GPU-accelerated EDA and traction with agentic EDA capabilities, with 20 customers evaluating solutions across specialized AI agents. SNPS. This business also delivered a strong quarter, extending Synopsys' reach into system-level design and multiphysics simulation. Demand is growing across industries, fueled by AI data center buildouts, aerospace and defense, for AI model training data, and automotive, for safety-critical systems. Design IP. The company is increasing alignment with hyperscaler demand for custom AI silicon. High-speed interconnect IP, like PCIe 7.0 and 24G, continues to see accelerated demand. The shift to multi-die and chiplet architectures is driving demand for die-to-die interoperability, with over 150 UCIe lifetime wins. Synopsys also delivered the industry's first HBM4 IP test chip. While IP growth is expected to be muted for fiscal year 26, it is believed to have bottomed in Q1 with sequential quarterly improvements expected in the second half, driven by focus on high-value opportunities aligned with AI and hyperscaler customization. Processor IP solutions. The pending sale of this business is expected to close shortly. Management changes and investor relations. Synopsys announced a cooperation agreement with Elliott Management and the appointment of Jesse Cohn to its board as an independent director. They welcome his constructive insights. Synopsys also plans to host an Investor Day on September 30, 2026. Financial details. Shelagh Glaser, CFO. Shelagh Glaser provided the financial details, confirming a strong Q2 exceeding guidance. Revenue, $2.276 billion, exceeding guidance. SNPS channel revenue accounting. An accounting impact related to recognizing SNPS channel revenue on a gross basis added $12.5 million to revenue and expense, neutral to EPS and cash flow. This change expands reach to new customers and provides clearer business insights. Non-GAAP operating margin, 39.5%, exceeding guidance. Non-GAAP EPS, $3.35, exceeding guidance. Backlog ended at $11 billion. Segment financials. Q2 2026, Design Automation. Revenue was $1.822 billion, including SNPS. EDA revenue grew slightly over 8% year-over-year, with strength in hardware-assisted verification. Adjusted operating margin, 43.3%. Design IP. Revenue was $454 million, down approximately 6% year-over-year, but up 12% sequentially. Adjusted operating margin, 24.4%. Cash flow and shareholder returns. Free cash flow, approximately $575 million in Q2. Cash and short-term investments, $2.48 billion. Total debt, approximately $10 billion. Share repurchases. Initiated a $250 million accelerated share repurchase and executed a $50 million open market share repurchase during the quarter. Full year 2026 guidance update, raised. Synopsys is raising its full year guidance based on strong first half performance and confidence across the business. Revenue, updated to $9.625 billion to $9.705 billion. This includes a $35 million increase from business performance, a $60 million increase due to SNPS channel accounting, offset by expense increase, and a $40 million reduction from the pending Processor IP Solutions divestiture. SNPS revenue contribution, expected to be approximately $2.96 billion, including the accounting impact. Total GAAP costs and expenses, expected to be between $8.469 billion and $8.599 billion. Total non-GAAP costs and expenses, expected to be between $5.675 billion and $5.725 billion. Non-GAAP operating margin, 41% at the midpoint, a 50 basis point raise. GAAP earnings per share, $2.49 to $2.91. Non-GAAP earnings per share, $14.72 to $14.80, a 34-cent increase at the midpoint. Cash flow from operations, raised to approximately $2.3 billion. Free cash flow, raised to approximately $2 billion, an increase of $100 million. Q3 2026 targets total revenue between $2.41 billion and $2.46 billion. Non-GAAP earnings per share, $3.63 to $3.69. Key questions and management responses. IP business recovery and future growth. Management is enthusiastic about the IP opportunity, noting a broad portfolio and focus on high-value, customized IP aligned with AI and hyperscaler demand. New business models are expected to capture more value. Sequential quarter-over-quarter growth was achieved in Q2 and is expected to continue. Margin expansion and synergies. The company expects to achieve about half of its committed SNPS cost synergies by the end of FY26. Further details on remaining synergies and margin expansion drivers will be shared at Investor Day. Revenue strength drivers. EDA versus IP strength was across the portfolio, driven by AI semiconductor opportunities, hyperscaler chip designs, and the essentialness of SNPS solutions for advanced packaging and thermal management. Agentic capabilities and contract structure. The evolution towards agentic engineers is a significant opportunity, driving increased demand for Synopsys products. Contracts are evolving from subscription licenses to a combination of subscription plus consumption for agents. Intel Foundry engagements. While Synopsys is aware of Intel Foundry's expanding engagements early on, current guidance does not account for any upside from these in FY26. Upside will be seen as these wins move from evaluation to production. New investor/board member impact. Interactions with Elliott Management and Jesse Cohn show alignment on value creation and the essentialness of Synopsys assets. Focus is on further monetization and improving efficiency for better operating margins. SNPS channel operational plan. The SNPS channel, particularly for industrial markets, offers opportunities to reach a long tail of customers and areas where Synopsys Classic lacked coverage. Products are being moved into the channel, and the new CRO is architecting the go-to-market strategy to leverage these capabilities. Geographic dispersion. While China showed sequential growth, including SNPS, North America and Europe declined. This is due to the strength of the SNPS portfolio outside of semiconductors in areas like aerospace, defense, automotive, and industrial in the US and Europe, while China's design start environment remains challenged by restrictions. Growth durability versus improvement. Management emphasizes the durability of growth while also highlighting inflection points that can improve the growth rate, such as changing monetization strategies for IP and combined EDA/SNPS opportunities driven by AI and agentic workflows. More details will be provided at Investor Day. Multiphysics fusion applicability. The greatest initial applicability is in sign-off, but the key value is bringing multiphysics simulation earlier in the design phase to account for complexity in 3D IC and chiplet architectures. Headcount reductions versus hiring. Synopsys is still on track to meet its 10% headcount reduction target, but is also investing in critical areas and hiring in key priorities to deliver the roadmap and support go-to-market execution. Conclusion. Sassine Ghazi reiterated his enthusiasm for Synopsys as the leading provider of engineering solutions from silicon to systems, with a portfolio essential for AI innovation. He thanked the Synopsys team, customers, and shareholders for their commitment. This concludes the summary of the Synopsys Q2 2026 earnings call.